Okay, dear colleagues and friends, nice to see you here. Good afternoon. Thank you for joining us, and then welcome to this is our AI Summer Seminar Series, now start from today. So this is the first AI Summer Seminar Series, because we've just done our spring one. So actually today it should be Professor Braganza do the opening, so I'm just covering him because he has some other business, so I'm just covering him. So on behalf of Professor Ashley Braganza, I'm doing the introduction for Dr. Pamela Nika. Pamela is a lecturer in corporate and finance law and a member of our AI Research Center. Pamela has acquired extensive knowledge and expertise in the area of financial regulation and banking law. Pamela holds a PhD from University of Reading, an LLM from the City University of London, and then an LLB from National and Kapodistrian University of Athens. She's also a member of the Athens Bar Association since 2014, and it has practiced law in areas such as commercial law, banking law, and international transactions. Pamela's research interest lies in the area of banking law, financial regulation, and Fintech, which is we're going to discuss today. She's going to discuss today. So in today's seminar, Pamela will take us to explore the notion of central bank digital currency by focusing specifically on the digital euro and then the changing role of European Central Bank, and also share some insights on this very interesting topic. So now I'm going to, before I hand to Pamela, I think I have allowed all of you to talk. So if you can mute yourself when Pamela was presenting, and then when she finished, we can start a discussion on this very interesting topic. So now I'm going to hand over to Pamela. Pamela, over to you.
So hello, thank you very much, Wei. Thank you for having me. Thank you for the introduction. That was, and thank you very much for pronouncing very correctly the Kapodistrian University of Athens. So today we'll be discussing about quite a contemporary topic. I'm just welcoming any comments. You can just unmute yourself, ask questions, and let's just have a discussion. It's a very small group of us here. So I'm looking forward to hearing your views as well, and to sort of like share our concerns or any sort of like input to this sort of like early piece of research. But I think it's a contemporary topic, very new, up and coming. So hopefully that will be an interesting presentation for you guys. So yeah, we'll discuss the digital euro today. I'll try to simplify a few things just to sort of like to get to the notion of digital euro. So then we can have a discussion together. Well, starting, I'm trying to change slides. Okay, so starting, first of all, we're just talking, so the main point, the main focus today will be the digital euro, right? So we are talking about digitalization in general, and specifically for the digital euro and sort of like the legal implications in relation to the European Central Bank. So starting with digitalization, which has spread through every corner of our life, it truly affects how we live, how we consume and interact with each other, but it also affects how we pay, right? So nowadays, most of us are quite familiar with phone payments, with watch payments, and all sorts of electronic means of payment. So people nowadays just pay more electronically, and it's a clear trend that has been accelerated the recent years. So in fact, electronic payments have accelerated even more during the COVID crisis. And there's actually research, so there's evidence, data, that the coronavirus pandemic has had an impact in accelerating contactless payment and other forms of alternative means of payment. And you may be wondering, well, it may sound straightforward, but obviously electronic payments are convenient. So you do not have to have coins or change, or you do not have to look to go and find an ATM to withdraw banknotes, etc. So there have also been lots of technological advancements, I would say, in recent years, which have made it even more convenient for us to pay electronically. For instance, we've got contactless payments without a PIN. We've got biometric sort of like recognition that allows for contactless payments. We have payments through our smartwatch, through our phones, etc. So for banknotes, however, the technology has not really changed for hundreds of years now. So there is a clear imbalance, I would say. The electronic means of payments are becoming more and more convenient, whereas, and actually user-friendly, whereas payments with cash, they stay always the same, right? So it is only natural to lead us to what it is progressing. So this creates a trend to electronic payments. However, this is not to say that this is sort of like a new discovery, or this is something that just started exploring, or we just have started exploring these payments. That's not true, because since 2009, right after the financial crisis, the payment industry has undergone through a revolution. So, and this is due to the technological advancements. So that was the driving force, I would say. And in fact, as we have seen it, the rise of cryptocurrency, maybe not a surprise after all, since all this technological advancement sort of like entering the market. And it was, if we go back to 2009, where it was where an individual or a group of individuals under the name of Satoshi Nakamoto, they laid out the theoretical framework of cryptocurrency, or Bitcoin, one of the most famous ones, in this famous paper called Bitcoin, a peer-to-peer electronic cash system. So the cryptocurrencies offer this alternative means or method of storing money and making payments without really having to rely on the traditional banking system and government controls. So the initial issuance of Bitcoin has led to sort of like much interest in cryptocurrencies, which is really evident from the rise in their value nowadays. So I'll give you a representative example, which is cited quite a lot. It's an example of a programmer who actually in May 2010, he purchased 2 large Papa John pizzas, and that cost him, I think, around 10,000 Bitcoins, which was worth at the time around $30. Well, guess what? Nowadays, that price is actually 82 million. So you can see that this guy has really paid 82 million to buy 2 pizzas. So there is a constant flow of new cryptocurrencies offering sort of like improved solutions coming to market. And the current, the more recent that I've found, that raised market cap of the top 10, I'd say, cryptocurrencies, they exceed to $265 billion. So this indicates the fast-paced evolution in the use of these alternative means of digital payment. So even though everyone, I would say, has heard of cryptocurrencies, they are in fact quite complex and quite sophisticated in the way or in their use. And this is because they are really based in this sophisticated encryption. So they are based on a blockchain technology. And as you can imagine, this is not something that everyone is familiar with, or it's definitely not something as straightforward as using your smartphone or your smartwatch to complete a payment, right? So beyond this complexity, I would say, involved when it comes to using cryptocurrencies, even for the most straightforward means of payment that most of us use, as I said before, when we're sort of like making all these payments, we are in fact interacting with money in our bank account. So where we're making a payment from our watch, from our mobile phone, we are interacting with money in our bank account or our credit card. So, but just imagine what it will involve, or how different will be if we could have access to the digital equivalent of that banknote or coin, right? So the European Central Bank, right, made an announcement in November 2019 in which they've openly expressed actually the willingness to consider adopting their own digital currency. And that is the digital euro, right? So shortly after this announcement, in November 2019, the European Central Bank's President Christine Lagarde actually stated the European Central Bank has actually assembled an expert task force. And this expert task force will work in close cooperation with the national central banks. And they were meant to actively sort of analyzing the feasibility and the potential outcome of establishing and adopting this digital euro, or the central bank digital currency. Lagarde actually said that it seems that the speedy payment transactions They sort of like they wanted to enter this sort of like speedy payment transactions, and the European Central Bank wanted to play an active role in facilitating this sort of like cheap and speedy payment transactions. And also they will continue to assess the costs and benefits of issuing the digital euro. In October of 2020, the European Central Bank published a comprehensive report on the possible issuance of these digital currencies, or as I mentioned before, more precisely, the digital euro. So the report was prepared by the high-level task force on central bank digital currency, and it was approved later on by the Governing Council of the European Central Bank. Later on in January 2021, they opened a public consultation, and we also have the result of that public consultation now on the views of the public, the stakeholders, in relation to the adoption of the digital currency. But before analyzing all these legal implications of this decision of the European Central Bank, it is really important to differentiate and define between central bank money, which is essential banknotes and coins, and commercial bank money, and sort of like the question, sort of like answering the question where a digital euro comes in here. So, starting with the central bank money versus commercial bank money. So, payments in developed economies can be made using many different forms of money, but in the wholesale financial market, money exclusively takes the form of bank deposits, right? And payments take the form of transfers of those deposits that are held at a common bank. And of course, everything is sort of like organized according to this given set of procedures and rules. So the payment system, okay? So when it comes to differentiating now between central bank money and commercial bank money, we could say in short that central bank money consists of deposits that are held at a central bank, and commercial bank money consists of deposits held at a commercial bank. So commercial bank money represents practically the bulk of stocks of deposit money. So linking it now with, linking this difference, I would say, of central bank money and commercial bank money, with the various functions of money, we can say that the unit of account function of money is given by a central bank, right? So there is not backed any longer by any precious metal, such as, for instance, during previously before the 70s. So whereas when we are talking about stock of value, we can say that commercial bank money now by far dominates the central bank money. And this is because people, they hold much higher deposits with their banks. So when it comes to the means of payment, or to the means of payment function of money, we have sort of like a predominance, I would say, of banknotes of cash relative to the commercial bank money. And this we typically use for payments in form of cards. So although based on statistics in the euro area, still 75% of payments in shops, it takes the form of cash, surprisingly, whereas 25% it takes the form of cards. I think that these statistics, they have changed recently during the pandemic, but at least these are the latest ones. So the electronic payments, commercial banks money, payments, really, that they've been predominating for a very long time now. So for example, when companies, they pay their suppliers, they pay their employees, they pay their taxes, they always pay electronically in commercial bank money. But when we are talking now about central bank digital currency, we are practically talking about a digital equivalent of a banknote. So let's go more in depth in relation to the central bank digital currency, which is the very idea of the digital euro, right? So cryptocurrencies, as I said, have challenged this traditional pillar of the financial system. And against this backdrop now, central banks are actually faced with the threat of individuals being able to store, spend, and move value without really any reliance on the fiat currency. So this is a huge threat, I would say, to the traditional role of central banks. And this is a huge threat to the traditional role of central banks in terms of how they sort of like how they operate how they operate or implement their monetary policy. And so, well, it is little surprise that there is gathering momentum across developed banks to analyze and understand the potential effect of introducing a digital bank, a central bank digital currency. So I would say although providing this greater access to digital forms of central bank sort of like liabilities is not an entirely new idea, as I mentioned before, the recent debate has been also sort of like motivated more by a number of factors. And those factors are there's an interest nowadays in technological innovation for the financial sector. It's also the emergence of new entrants into the payment system and intermediation. We also have a decline in the use of cash in many countries around the world. And there's also an increasing attention in the so-called private digital tokens. So if we see, for instance, according to the view of the Bank of International Settlements, the central bank digital currencies is literally not a well-defined term, as you can see it here in my slides. So it's not a well-defined term at the moment. But if we have to break it down, the Bank of International Settlements says that it used to refer to a number of concepts. However, it is envisioned by most to be a new form of central bank money. And this is central bank liability dominated in an existing unit of account, as I mentioned before, which serves both as a medium of exchange and store of value. So this mix of new and already existing form of central bank money, it actually makes it quite challenging to precisely define what central bank digital currency entails, right? So in fact, for purposes of analyzing what may change, it is actually easier to define a central bank digital currency by highlighting actually what it is not. So a central bank digital currency is a digital form of central bank money that is actually different from the balances in traditional reserve or settlement accounts. So central bank digital currency on the surface is sort of straightforward. It is a form of currency which is issued directly by a central bank to both supplement the existing sort of like paper currency, but also to compete with cryptocurrencies like Bitcoin, Ethereum, etc. They are already existing in the market. So central bank digital currencies would fit in as part of a country's monetary policy, or how a central bank sort of like controls the flow of money and the rates associated with currency. So we saw in 2015 that Bank of England, it was the first one actually to discuss the concept of central bank issued version of digital currency. And then we have other institutions, financial institutions and regulatory bodies really start paying attention. So nowadays, many central banks, including the European Central Bank, are looking into this notion of central bank digital currency. In fact, in 2018, there was a study again from the Bank of International Settlements, according to which 70% of the central banks that responded to this report, they actually reported they are working on some sort of or some form of digital currency research or implementation, right? So we have the Fed, Federal Reserve, the Bank of England, the People's Bank of China, the Riksbank, and the European Central Bank. And the People's Bank of China is actually an interesting example because it's the most advanced of all. It has already sort of like deployed a large scale of experimentation and has in fact begun to issue blockchain-powered digital currency to its citizens. So, but it's interesting, I would say, to follow these developments, sorry, and see how they will progress, especially how the design features of the central bank digital currency will take shape, which will in fact determine how the central bank digital currencies may actually serve as means of payment and a store of value in practice. So, and one thing is for certain, of course, that all these choices will have implications for payments, monetary policy, and financial stability. So going back now to the discussion of the digital currency, the digital euro, right? Because we sort of like touched upon of the central bank digital currency and what do they entail. But what is the digital euro after all, right? So as I mentioned earlier, the European Union level, the European Central Bank has sort of like made this announcement about announcing its decision to create its own digital currency or the digital euro. So what is this digital euro, right? So simply put, it is banknotes in electronic form. So in the sense that banknotes have been accessible to all for use, okay? So every citizen, every firm in Europe can actually hold euro banknotes. There are actually no restrictions to that, while electronic or digital central bank money, at least for the time being, could only be held by commercial banks in the form of deposits with the central bank. So they're not easily accessible. So the digital euro instead would practically combine the two features. So it would be electronic, but at the same time, accessible to everyone, to the public. So when it comes to its rationale now and to why we're discussing about the digital euro, so according to the European Central Bank, the digital euro will sort of like create these synergies with private payment solutions and contribute to a more innovative, competitive, and resilient European payment system. And it will also contribute to the ongoing process of European integration as well. So in the context of this rapid digitalization and people using this electronic means of payment more and more often, but this time with the difference that you are going to get access directly to what we call central bank money. So you may be wondering, at least by now, that as we discussed, say there has been a while now that cryptocurrencies, right, that they've been around, and or crypto assets are sort of like growing rapidly, right, is the same pretty much. So if there are these other digital currencies out there, such as Bitcoin, Ethereum, etc., why do central banks need to get involved? And what is the difference between the two forms now of digital currencies? So cryptocurrencies or crypto assets versus central bank digital currencies, right? So, and there's a fundamental difference between the two, because there's sometimes could be a confusion since they could have very, very similar features, but they're fundamentally different, right? So when we are talking about crypto assets or cryptocurrencies, the commonly accepted view is that they do not really classify as money, right? At least, you know, the sort of like the commonly accepted view at the moment. So both the European Central Bank and Bank of England, they actually reject the view that cryptocurrencies are money. So they don't think they qualify as money, as they do not consider them as unit of account, right? Hence, they don't consider them to be money. However, there's also another view, for instance, of the German Federal Financial Supervisory Authority. So they classify actually Bitcoin, which is one of the most famous cryptocurrencies, as a unit of account, which is comparable to a foreign exchange. And the only difference, at least according to them, is that they do not refer to it as a legal tender. So Bitcoin, for BaFin, is a sort of private means of payment, and it kind of like falls under German law, with implications for all of those trading in Bitcoin, really. So it's various views. Or for instance, China, right? It restricts the Bitcoin, all the Bitcoin mining business or industry out of sort of like environmental or financial stability concerns. So there are various views out there, but at least none of them as qualified cryptos as legal tender at the moment. Now, most commonly accepted is actually the view that cryptocurrencies are more of a value, they're assets, or some even define them as commodities, since they sort of like they fluctuate, their value fluctuates, just like oil, for instance. So even though it's sort of like debatable as to whether cryptocurrencies really classify as money, they are definitely not as trustworthy as money, at least not for the time being. So even though, as a matter of fact, some people like them, hence the widespread of their use, really, and their growing size. So some people like the idea that they're using them as a means of payment, and that they are not regulated, and that they have no central authority to back them. But it is actually believed that it is the very fact that they are not regulated, the fact that many people are using them, and it has gained, I would say, millions of customers in a very short period of time, and they are very profitable for some people. So perhaps this is also to be attributed to the largely unregulated nature of the market. So in any case, the fact that cryptocurrencies are not regulated creates all sorts of risks for the users. So the public authority has really no responsibility whatsoever. So the situation will become even more complicated now with the launch of Libra, or at least with the announcement of the launch of Libra. So which is the Facebook's cryptocurrency, which is just a project for the time being, but soon to be implemented. So Libra, it's a fundamentally different sort of like crypto than the existing cryptocurrencies such as Bitcoin and Ethereum. And why is that? Well, it seems that it will be more similar to commercial bank money. So, and why is that? Because it contains a promise of convertibility. It's actually quite unclear as to whether and how it will be regulated, but fundamentally different from cryptos because it contains this promise of convertibility. So coming back again to drawing the line between cryptocurrencies and central bank digital currencies. So first, as I mentioned before, all central banks, including the European Central Bank, have explicitly stated that they will continue issuing their banknotes. Okay, so even if they issue digital currencies, they will continue to issue banknotes. But it is believed that the usability of banknotes may disappear, following the trend of the recent years, because many shops no longer accept cash, or they prefer card payments, or most importantly, customers also they prefer electronic payments nowadays. So therefore, we're very much likely to reach the point that people will have to rely eventually solely on digital payments, and the payment industry is a network industry in which economies of scale apply. So there will be always a higher degree of concentration and of market power. So the payment market as an oligopoly or monopoly even, and this means that dominant players in the market can set higher prices at end, and competition is missing. And here the continuation of available central bank money for usage and payment as well would mean an outside option for consumers. So, which also at the same time, it sort of like puts constraints on the potential use of market power by those private companies which easily dominate the payment market. For instance, at European Union level, the largest players are foreign companies. And the trend shows that they further expanding the market. So in a certain way, payment is a strategically important economic function, and it is not really ideal that this is in the hands of a few sort of like foreign companies. It just adds really to the vulnerability in the Eurozone's financial system. So the idea of creating this digital euro, it is in a sense a strategic move in an attempt to keeping up with competition, really. So it is about adding an option. It's not about taking anything away. So it's not about taking the banknotes away, but it's about adding this option. And sort of like, and it's not about taking away the private solution as well, at least according to the announcement of the ECB. It's not about sort of like, so the private sector has really offered very convenient and impressive electronic payment solutions, and will continue to play an important role in sort of like controlling at least commercial bank money. So the idea is not to expecting that the banks or other businesses or other business providers will be out of business, but the financial system will still have to rely on them. So we will still need the bank to receive our salaries, to pay our rent, but it is about offering sort of this alternative solution that will be actually available to the public. So in short, the digital euro would be an electronic form of central bank money, accessible to all citizens and firms, just like banknotes, but in a digital form. And this will be used to make daily payments, and it will sort of like help to make these daily payments fast, easy, and secure. So it will complement cash, not replace it. So, so the most importantly, I would say, when it comes to the main differences between cryptocurrencies and central bank digital currencies, central bank digital currencies will be centralized. So meaning that all the transactions within the network will be regulated in a centralized location, like a bank, whereas cryptocurrencies are decentralized, and the regulation inside this network are governed by the majority of the community, right? So that's I would say it's one of the major differences. So this practically implies that cryptocurrencies are not regulated, whereas the digital euro or other types of central bank digital currencies will be issued, monitored, and regulated by the central bank. In our case, with the digital euro, is the European Central Bank. So the digital euro will be the digital representation of Europe's fiat currency, really. So it is effectively a central bank issued cryptocurrency. Okay, so going back again to sort of like the whole discussion about the adoption, the actual implementation of digital currency. This is very much work in progress, I would say, and it's worth reviewing the approach of the European Union policymakers. They're talking about implementing it around mid-2021, even though that may take longer. But I've included here the some of the announcements of the European Central Bank in relation to the creation of the digital euro. For instance, one representative one says Europeans are increasingly turning to digital in the way they spend, save, and invest. So our role is secure trust in money. This means making sure the euro is fit for the digital age. So we should be prepared to issue digital euro should the need arise, even though now it's quite clear that the implementation will take place eventually. So what will be different really with the digital euro? So someone may have different sort of like electronic means of payments, right, in completing transactions. So as I mentioned before, we have cards, we have contactless payments, we have smartwatches, phone payments, etc., right? So with the digital euro, we will literally have an additional means of electronic payment. And it's up to the individual, right, to decide on the basis of convenience, really, which one would like to use. So one reason that someone may want to use the digital euro could also be privacy, huge discussion about privacy. So for instance, it could be that someone is concerned and they don't really like the idea of sort of like private solutions that could use your payment data for customizing advertisements, etc. So the digital euro would guarantee not to use the payment data, etc. So that could be one of the things that was actually part of the public consultation as well. So another thing is like, so in terms of design and technical solutions, so what the design of the digital euro would be, if we dig in deeper in the literature in relation to the central bank digital currencies, so people are talking about two basic design choices or approaches. At European Union level, it's not quite clear yet which approach will be followed, but at least it's worth having a look at the sort of like most prominent sort of like theories applying to central bank digital currencies. So one is the central ledger. So the central bank digital currency will operate through a single central system of accounts. And in this central system of accounts, you would have to book every single transaction. So, and that's a traditional approach, okay? So all private digital payment solutions are in a certain way based on these central ledgers. On the other side, what is often sort of like mentioned is the distributed ledger technology, which is also what is behind Bitcoin. So in this case, the idea is that this is a decentralized, the whole ledger is decentralized without a central book. So for the digital euro, the specifics of the design are still to be announced, and as I mentioned, is work in progress. But they're discussing both the distributed ledger technology, but I think that the prominent view it's more in favor of the central ledger. So, to sum up, really, that this digital euro would preserve the public sort of like good, and that the euro provides us all these years, the citizens, free access to sort of like, it will provide with a free access to a simple, universally accepted and sort of like risk-free and trusted means of payment. But it also poses quite a lot of challenges, especially to the role of the European Central Bank. And this has been stated actually quite a few times repeatedly from the European Central Banks, saying that the Eurosystem must really address a number of important legal considerations related to the digital euro, including the legal basis of issuance, the legal implications of different design features, and the applicability of the European Union legislation to the Eurosystem as the issuer. So there are a few considerations really here. I mentioned that design's feature will really determine also the legal basis of the issuance, But at the same time, we have little information on that, and discussing or examining or exploring the role of the European Central Bank. What we need to be looking at is really the legal mandate of the European Central Bank. So this announcement, right, for the adoption of the digital euro by the European Central Bank has really sparked a debate over these changes, or over the changes that this may bring to the European Central Bank's legal mandate. So this debate, it's not really a concrete business just yet, but it's rather analytical, I would say, because we don't really know the features of the digital euro. So, but as you can see here, I've included a quote from the vice chair of the European Central Bank Supervisory Board, and he's really highlighting that it's of fundamental importance to explore this optimal design for the digital euro in order to create a solid legal basis for their adoption. So in practice, this may prove to be slightly challenging, at least under the current legal framework, right? So let's have a closer look at the European Central Bank's legal mandate. So we can then further explore whether and where the issuance of the digital euro fits in. So as an European Union institution, right, the European Central Bank operates under clearly defined rules, right? And those rules can be found in primary and secondary European Union law. So the European Central Bank's objectives and tasks are really set in the Treaty on the Functioning of the European Union, in the statutes of the European System of Central Banks and the European Central Bank, and a few key directives as well. So the key legal article outlining the European Central Bank's legal mandate is Article 1 to 7 of the Treaty of the Functioning of the European Union. And the main and another fundamental article is also Article 3 of the Treaty of the European Union. So if we see the statement and the wording of Article 1 to 7, I've included here for your reference, guys. I'm not going to go and read the entire article, but just highlighting, so given the wording of 1 to 7, there's a clear obligation for the European Central Bank to consider price stability as the prime objective of the European Central Bank. So this article provides sort of like the most obvious grounds for ruling out various monetary policy options. And if read together with Article 3 of the treaty, this really means that there is a legal obligation on the European Central Bank to act and to promote full employment and other sort of like social goals, such as improvements in the quality of the environment, etc., provided that all these actions taken to support those goals do not really endanger the main objective of the European Central Bank, which is to safeguard price stability. So the basic principles of public and constitutional law, they actually imply that all the public entities, including regulators, they have limited and enumerated powers. And once such entities' conducts or actions do not fall within the scope of these enumerated powers, they would be considered to be ultra-virus or unconstitutional. So that's why we are mentioning, we are discussing the mandate of the European Central Bank based on the main articles that sort of like provide the solid basis for the mandate. So, and that applies to every institution really. So, and this is particularly important in a multi-layered sort of like constitutional arrangement, such as that of the European Union and the Euro area in general, where the principle of conferral, the principle of proportionality, they do impose all these additional limitations on the powers of the European Union institutions, agencies, and bodies. So in line with these general principles and the main articles, as I discussed briefly, the European Central Bank has a clear, I would say, mandate and limited regulatory, supervisory, and oversight tools to really accomplish all these objectives that are provided on its mandate. So launching the digital euro now by the central bank should be grounded really on the European constitutional, monetary, and financial laws, and clear the judicial tests which are applicable to the European Central Bank's regulatory, supervisory, oversight, and monetary policy functions, right? So this is when we start discussing about solid legal basis of establishing the digital euro. So the legal basis now for issuing a central bank digital currency, or the digital euro, by the European Central Bank could potentially be found on the European Central Bank's price stability mandate, right? So its basic task of the definition and implementation of monetary policy, and of course promoting the smooth operation of the payment system. So to achieve this price stability as the main objective of the European Central Bank and define and implement monetary policy, the European Central Bank is given this exclusive right to issue banknotes, right? Banknotes and coins, which are both have the legal tender status within the Union. Okay, and this is clearly defined in Article 282, paragraph 3, and Article 128 of the TFEU, and Article 11 of Regulation 974/98, right? So in particular, if we read these articles together, the authorization of banknote issue is an exclusive right of the European Central Bank, and Article 128 actually lays down the legal tender, right, as I mentioned before, or the legal tender status of euro banknotes. And it actually highlights that the banknotes shall be the only such notes to have the status of legal tender within the Union. Now, if we read Article 11 of Regulation 974/98, it does the same with regards to euro coins, right? So it comes without saying that euro banknotes and coins are the only legal tender really in the European Union member states, whose currency is the euro. So although it could be argued that the exclusive right of the European Central Bank to issue banknotes and coins could potentially include the issuance of digital euro, that appears to be their digital version anyways. At least this is one of the views. A countervailing argument to that would actually suggest to the contrary. And why is that? Well, because the digital euro does not seem to be just a consequent technological upgrade to the sort of like old age technology of issuing money, right? So most importantly, if we see the wording of 128, it does not really include other currencies or means of payments, including digital currencies. So it is debatable, right, as to whether Article 128 that provides the legal basis for the banknote and coin issuance of the central bank, of the European Central Bank, could actually serve as the legal basis for the adoption of the digital currency with the status of the legal tender. That's the idea. So the status of legal tender, right, by the European Central Bank. So consequently, should the European Central Bank decide to adopt the digital currency without the legal tender status, or sort of like outside the meaning of Article 128, this would mean practically that we will have the issuance of an authorized means of payment, but without any constitutional protection. So that is the sort of like that is the main point of debate, I would say, or issue to be discussed further. So sort of like with this aim to sort of like contribute to the existing policy debate over the European Central Bank decisions to adopt these digital currencies, right? I'm trying to explore a bit further whether the current legal basis of the European Central Bank could actually serve as a robust, as a solid legal basis for the adoption of digital currency. It could be that will require a treaty amendment. It could be that they would fit it in without the sort of like, the umbrella or the protection or the constitutional protection. Or it could be that, without having the legal tender status within the union. So there's many possibilities or options. But one thing is for sure, that the payment systems are definitely changing, and it's worth following those developments and explore it further, what their legal implications will practically be for at least the European Central Bank, or even for Bank of England in the future. They're also considering adopting a digital currency, but at least we are focusing for now in the digital euro, and it's quite interesting to follow those developments. And that really ends my presentation. Thank you very much for listening. I think it was very long. So any questions or comments are very much welcomed.
Thank you, Pamela. I think there's a question in the Q&A.
Mhm.
Can you see it?
I'm trying. Okay, so Winnie is asking, I'm curious to understand what will be the legal basis for suppliers of these central bank digital currencies? Will they trigger a custodial or debt relationship? Well, Winnie, that's a very interesting question. Which I don't have an answer for that really, because the idea is if we haven't got legal basis for the issuance of digital currencies, then it's a bit excessive to discuss what the legal basis for the suppliers of these central bank digital currencies will be. So firstly, we need to examine what the legal basis of the issuance of digital currencies will be from the authority that will be empowered to do so, which in our case is the European Central Bank, and then perhaps look into the particularities. Custodial or debt relationship, yeah, we don't really know just yet. But everything will be determined from the legal basis. A starting point, I would say, would be the legal basis of the European Central Bank and issuing those digital currencies, and whether we'll have the same legal status with the actual banknotes, the euro banknotes or end coins, because they are talking for something equivalent, but at the same time, even the design is not equivalent, or the sort of like the end result they're trying to achieve, given the fact that they're trying to compete with existing cryptocurrencies. So it's going to be either a central ledger, distributed ledger, etc. So the nature of them is slightly different than the traditional means of payment that we have so far.
Winnie, you're allowed to talk. Is that okay for your
question?
You
can unmute yourself.
Yeah. Okay. Any other questions?
Hello.
Yeah.
I just want to, well, can you hear me?
Yeah,
right?
yeah.
Yes, we can, clearly. Yeah, please
Perfect.
Go ahead.
So my name is Winnie, and I'm a former student of Dr. Pamela, and I graduated last summer. So yeah, I do agree. I think at this point, it is a bit excessive, or I'm just trying to think, well, if indeed the commercial banks, for example, will be the suppliers or anyone else in this case of these digital currencies, then what is the point of issuing them in the first place if they will be, assuming they triggered a custodial relationship, then it means they will have to charge a fee for holding the digital currencies on our behalf as the owners? Or will it be the same as now as the debt relationship? Then it doesn't make sense issuing a digital currency because it's still the same legal relationship. But yeah, I agree. It's a bit too early, maybe.
I think the aim is for them to be the same as the banknotes and the current, money. That's the aim. But the problem is that the question arises as to, was the basis of that? That's the main question. But what they're trying to achieve is the same end result. So people at some point, let's say, will sort of like not replace, but will be able to use a digital euro as opposed to cash, and they will have the same sort of like end result.
Let's see. Thank you.
It's interesting. It's quite controversial, to be fair, but it's interesting to follow those developments or explore sort of like the legal dimension of this debate. We have further chat.
Yeah, there's a question from Ping. Ping, you can talk. You can mute yourself, and then instead of reading it, it's just too small to read.
Oh, hi, Pamela. Thank you very much. I'm so bad at this. I don't even know if my video is turned on. Sorry. No, so this is just, I know it's really early days. Oh, my camera is turned off. That's why. I know it's super early days. It's very exciting, and especially I've read that China is rolling out the digital yuan, right? Yeah. And I was doing some research on digital currency several months ago around Southeast Asia. So this is very, very timely indeed. I'm just curious about your personal opinion, as we all know it's very much early days, but do you think there might be a situation where CBDCs of different jurisdictions will be able to interoperate across the different jurisdictions. And I mean, I think this is obviously something that might allow regulators to monitor transactions and, like anti-money laundering and things like that as well. And to, obviously for information sharing. And I'm just wondering what you think about that possibility.
That's an excellent point. And I think it's quite a valid one, given, all the attempt at international level to sort of like harmonize and synchronize a bit the regulation, especially the post-crisis sort of like response at international level, so we can have access to all sorts of information, so we can predict risks at an early stage, and then perhaps future financial crisis from happening, sort of thing. So that's quite relevant of what you're saying. But I think that is very ambitious to happen in the future. So at European Union level, there is a regional formation. I would say that's a challenge in itself, because it does require cooperation amongst national supervisors. And what happened during the previous crisis, it was mismatch of communication anyways. Hence, we created this, central authority that will synchronize regulation supervision at European Union level. However, it's quite challenging indeed, because those are information that usually need to be accessed at national level first, then perhaps regional level such as the European Union, and given the scale, moving it at an international level as well. But I think it's practically quite ambitious, even impossible to be achieved, but it will be excellent at some point. People were talking in the past about creating this sort of like authority that will sort of like supervise banks at an international level, or will act as the lender of last resort at an international level. So, for instance, one example was the International Monetary Fund acting as such authority. And it's very controversial politically, practically, and in multiple levels, I would say. But it's an excellent point. Because that would really predict, well, not just predict, but at least try to monitor a few early risks. So perhaps we can prevent or deal with risks early, so we can prevent future crises from happening, or deal with issues such as money laundering at a more sort of like sophisticated manner and more organized. So it's a valid point, but I don't think that's anywhere that we are not near there just yet.
No, thank you so much. But also, as you're talking, it also struck me, like if we're talking about information sharing among regulators, then it comes down to issues of privacy and data protection and all that kind of stuff, though. That's a completely different ballgame too.
That's another discussion as well. But
Thank you.
It's quite of a valid point. Thank you, Pin. Thank you so much.
Thanks, Pamela.
I think we have another question from Chung. Do you think that it would be a problem if anyone can issue their own cryptocurrency? Will there be a kind of inflation of cryptocurrency? You mean private issuance of cryptocurrencies? Not quite sure I understand this, but yeah, I mean, it's quite, cryptocurrencies operate in this sophisticated blockchain technology. I don't think that anyone can sort of like come up with the idea of developing a new cryptocurrency. And even if they does, it just takes time for the market to sort of like, for its value to go up, sort of thing. And then, it will depends on the market perception of its price. And it just takes a long time for creating fluctuation or inflation in the cryptocurrency market. We've seen new cryptocurrencies entering the market slowly. The biggest one, I think, at the moment is Bitcoin and Ethereum, but we have also small ones coming up. And their price, we have, it's a new one. It's quite interesting. I think it's called AIDA. And it's sort of like coming, I think at the moment, it sort of like costs around £1 per sort of like per cryptocurrency. It's quite a new one, and people are talking about an up and coming one. But then if you see the fluctuation of the price, it just goes from 1p to £1. I don't know, like, and it hasn't created any sort of inflation in the market. So I don't know. It's a very, very difficult market to sort of like predict the final outcomes.
Pamela, I think it's a very interesting presentation you made very today. Although you focused on the EU digital currency. Actually, I was reading some articles in terms of digital currency because we all know China has really quite reinforced lots of
Impressive, yeah.
it's impressive, and also they are doing a lot of a lot of countries making trade with Chinese companies.
Yeah.
Because I'm just talking from the international business, international trade perspective. Do you think the digital currency will have impact on the US dollar's position globally? And then also, again, the digital currency, do you think it's going to affect, because when we do trade, it's about exchange rate. So the digital currency is going to affect the trade. Do you have any thoughts on this personally, really?
To be honest, given all the discussion about, because when a few years ago, when people were talking about cryptocurrency, central banks were discussing about their effects, or the international institutions that were discussing about the impact of cryptocurrency financial stability, and everyone was concluding that, well, their size is really insignificant at the moment, so no steps to be taken really, or no actions at the moment. And as the size grew significantly, everyone is talking now about central bank digital currencies. So, and all this is to keep up with the competition of cryptocurrencies. So I guess logically, right, it's only reasonable to think that yes, of course, cryptocurrencies, given their growing size, they will eventually, not only to the dollar, but they will have an impact to currencies in general, right?
Yeah,
if they will grow with the same pace, then especially Libra entering the market, that will be an interesting one.
Yeah, because the reason I'm saying this is it's a very hot topic right now. I think the US is quite advanced. I saw an article they published Wall Street Journal in 2019. But if you read The Economist last week, there's an article from The Economist. They're saying the yuan is going to the Chinese yuan is coming. They change very fast. Because in China, if you go to China, they use the WeChat, Alipay. They buy everything using the apps. Mm-hmm. So it's really they're going really. I mean, 90% is in digital currency now. Really similarly, but it's quite threatening to the international trade market. Because I mean, I don't know about you. I buy a lot on eBay from China. You can see that. But personally, I think it's quite. Something is going to happen.
Yeah, for sure. And I was reading the other day, Bank of England discussing somehow regulating not cryptocurrencies per se, but the business. So now they that there's a lot of providers that they need to register with the FCA, with the Financial Conduct Authority. So there's like baby steps in an attempt to regulate them somehow, whereas the purpose of cryptos is being not regulated, so decentralized. That's the idea. And there's also all this discussion about regulating them now. So if they eventually regulate them, right, and then we have cryptos, and then we have digital central bank digital currencies, and then we have banknotes as well, what will be the sort of like not the comparison in between them, but what will be the impact into the financial system in general, right? So if we have something that acts as a legal tender, something that has a legal tender status, right, as banknotes on the one hand, and then now new entries into the market, the central bank digital currencies, right? And this will have the legal tender status. But on the other hand, we'll have these cryptocurrencies that are we try to regulate them somehow, but they do not have the legal tender status. So what happens to financial stability in the financial markets in general? So it's interesting to follow. It's a very fine line, and it's a very difficult balancing act, I would say.
Yeah, because personally, I'm not in this regulation law area. I think we have lots of experts here. Maybe you can answer the question. From you, is that currency, the money is related to the government in the old time. The government is part of the government. It grants the credits. But now, EU digital currency is quite a good idea. But there's so many EU members, and then now UK is out of EU already. So in the very short term, because of the pandemic has really accelerated adopting different kind of digital apps, the transaction all through this kind of apps. So I think the demanding of using digital currency is kind of, every day they increase to do that. So what's your opinion on that? Do you think we're going to have a digital currency in Europe next year?
I don't think that's going to happen anytime soon, to be honest. Let's say mid-2021, but we don't even have the legal basis yet. Like, there's no official response as to what the role of the European Central Bank will be on that. So I doubt it. But, given the pandemic crisis and all this increase of cashless payments and, electronic payments and all that, it could be faster. But we haven't got anything concrete at the moment. Even if you go, I'm following quite the updates on the European Central Bank website. At least the latest update says that we do not have a clear plan on implementation just yet. So that's, but I don't know when it's going to happen. But Bank of England as well has been discussing about having the digital currency, like the digital pound as well. So it's many central banks. I think it's happening. It's just about, what's the pace of it, sort of thing, time frame wise.
There's a question. There's a question from Winnie again.
So she's asking, you mean regulated cryptocurrencies themselves or their use? Well, in the literature, there's both views. So people are talking about discussing regulating cryptocurrencies altogether. And on the other hand, we are also talking about regulating just the use or specific aspects. So for instance, money laundering is a huge area of concern right now. So there are a few sort of like baby steps in an attempt to regulate cryptos in that regard. So it could be that there are specific areas, but money laundering is just one specific area. It could be, that later on we'll have other areas that will apply. But by regulating slowly sectors of the market, we may end up regulating cryptocurrencies one day, And given their growing size, I really, I won't be surprised if eventually we'll have a, solid regulatory framework for cryptocurrencies eventually. They're growing significantly, so and they're interacting with the current financial system.
Okay, I've been talking a lot. Any question from the crowd? Any questions?
Thank you, Yanis. Thank you for joining.
Okay, if you do have questions, I'm going to let me stop recording first.
Thank you, Michaelica.